Hey everybody, this is DayTraderRockStar, and this is a well, not a high probability, it's a market radar for the week of December 14th. And we're going to also show you some other stocks setting up, and I think some education along with this, because it's going to be interesting to see some things. We're going to jump right off talking about Friday's close. Friday's was a massacre in the markets, and what we got to find out what was underneath that level caused all that selling. There was a few things that carried over from the overnight session, but then we had some talk, and I'm going to just refer back to some of the news items that crossed over here. Reports of trouble in the bond market arena weighed on sentiment after it came to light that Third Avenue Management is liquidating its high-yield focused credit fund and barring investors' withdrawals. While it's doing so, this invited fear about other bond funds with similar exposure, while junk bonds faced day-long pressure and sent iShares, the iBox high-yield corporate ETF, down to its lowest close since 2009. Anyway, that was a lot of talk on that junk bond arena, and it caused a lot of selling. We sold off right into close. Now, futures are going to open up in about 2 hours here on Sunday evening. It's going to be interesting to get an early look at this. But typically of what we see right now, I'm just going to show you some interesting things. We look at the daily chart. We'll start off here looking at the daily. We'll zoom in here. You can see Friday's candle brought us back down to a kind of a target we were looking at. It was called a 1, 2, 3. Actually, an X marks the spot. You can see it on the 60-minute time frame. We're paying attention to this rise in trend line. This trend line that moves down off of this 1, 2, 3 pattern. There's another retracement trend line, and it was a rise in trend line here. So all this area, I put a big circle here, kind of measuring out. We could come down to the lower trend line. We could hold this trend line, but the news that made us break down through the trend line, and we're on our way down to the lower trend line, which I prefer to see. I like buying into that type of weakness. And when this process played out, we brought us down on the 60-minute time frame back into an oversold level. And we've been timing this off good. We had a nice bounce here, and it moved back up. We had a nice bounce here, and it moved back up. And these are, we're traders. We're not looking to get in here and take it off a year from now. We're looking at these levels to get in here, maybe go short here, understand where the best probabilities. And when we talk about this day in and day out on the radio, we really focus on the 1-minute chart. So it's important to understand that when we look at the 1-minute chart, this is a 1-minute chart. You'll see similar patterns playing out in the 1-minute chart. You'll see them on the 5-minute chart, the 60-minute chart, and the daily chart. Same exact things that are happening on every time frame. It just happens faster on the 1-minute chart, and you have to decide what time frame you want to trade at, and then you could combine those time frames and make sure that your 1-minute setup, you have your 5-minute at your back, possibly the 60-minute. It's great to understand the overall trend of the market, where you're going to see that with the 16 daily. So right now we're looking at this. This is the 1-minute chart, and we could see a very organized trade. And I put out a fantastic video of showing how to trade the market like this using calls and puts. I put this out today, actually on Friday, as a special educational video for the members. And it just shows you a technique of taking the HPS zones. And when we talk about HPS zones, we talk about these circles and squares. And we could look back here and we understand why we put a circle in here, why we put a square here, why we put a circle here. It all has to do with our channel lines, our patterns, the divergences. And again, I go over this all the time on the radio. So when we do put we put these usually here real time. These circles and squares representing our level. Here was a 950 reversal. This was a rise and wedge pattern. We mentioned that in the room on Friday, even though I was on the air. I made a point to Paul, talking about watch this breakdown. And then once you break down out of a recognizable pattern, another pattern will start, and you'll start to see the similar setups. You have a pivot up here, you have a pivot here, you had that pivot here. That makes a 1, 2, 3 pivot. You can start concentrating on a test of that trend line, a back down here, a test, back up here, a test, back down here. The interesting part on this, it's a bigger channel. So you have this little channel inside this bigger channel, and that typically plays out all the time. So we always look for that, and when two channels converge here, it's kind of an X marks the spot. And in this case, at 12:30, we had what we call a lane divergence, which made it a very interesting and an important area to watch for a bounce. And again, you could see that bounce, but as things got moving here, we could also recognize that this was a bearish bounce if we look at that 5-minute chart. So remember, we're looking at our 1-minute chart, our 5-minute chart, we're overlaying it. So we're going to go to this 12:30. Well, what time is this right here? This is about 2:15. 2:15, the market moves back up here. We start to get overbought on the 1 minute, 1 minute, 1 minute. Are we going to break out there? Let's take a look at the 5-minute chart. It was, double check there. That was 2:15. And I want to look at the 2:15 cash chart. And we're going to look at that 5-minute because that's our next important short term. And here's your 2:15 cash chart. Right up here, we started turning over. So that's, I referred to that and I said, all right, danger. We have this kind of rising channel. You can see easily on the 1-minute chart, but the 5-minute starts to turn over. It's very important to have that 5-minute on your side. So we know that the 5 minutes is about to turn over. We know that the 1 minute is now about to turn over, and we also know that the pattern is an X marks the spot sell signal combining two trend lines, a rising channel and a bigger downward channel. The two trend lines here combine. This plays out a lot, and that's where we get our circles and squares among some other setups that we'd like to put out there. So when we look at this, you don't even have to see this as being a 1-minute chart. It could be a daily chart. If we look back at the daily cash chart now, boom, we're looking at similar setups. We're looking at downward channels, and I want to actually bring this down to the 60. Here we go. We're looking at these downward channels playing out, the rising trend lines, channels within channels. This was actually I don't know if there was a parallel trend line over here, but it was very close to being one. Yes, it was perfect. You see this pivot area here, this pivot area here, this pivot area here. Now we came back down to it. So we had this channel within a channel, very, very similar, and I have to show it to you a little bit better. Come on, where's my things here? Sorry about that. All right, here it is. I just want to, what you see on that 1-minute chart, everything you see on the bigger picture. Here's this nice little rising wedge pattern, or a channel within a channel. There's a nice downward channel within a channel, a retracement channel line, the trend lines because of the exit marks, the small bounce, everything based on its time frame. And now what happened here coming into Friday, we get this news, this bond news. And I always say that technical analysis is trumped by news, meaning news can affect a chart. If you expect a great level to set up and all of a sudden there's news out there and pushes it beyond those levels, that's all okay, and that's just the nature of the game, and what we have to deal with. Sometimes it's called a bad beat. Sometimes you might think there's a great setup here, but as you know, the markets could have a different look at things, and all of a sudden something doesn't work out. So even though we have great levels, great HPS levels, they will break down sometimes. And when they break down, we have to understand why they did that. And if you understand why they did that, maybe you could kind of predict where they're going to go next and how they're going to bounce back. So we left off on Friday with an oversold hourly with an underlying trend line above us. There's a couple of retracement trend lines down here. As you can see, anything that retraces just an old channel breaks out. This continues to hold its strength. So if the price ever gets back down to that, you'll actually see it react, or should see it react. Same thing here. You had this kind of little retracement trend line. We have one sneaking up on us. So coming into Monday, tomorrow, if we do get that little move down to 204, 203, even 2,000, we could pop that. But also, we look at that big picture. And the big picture here, again, you can see the bigger channel. And there's a big trend line here, kind of a retracement trend line that we're coming back down to too, and we've noticed that. And that could actually bring us down into that 1980 level. So there's some options here. But here's the kicker. Just like last time we got oversold here and we were banging the table, I said, be careful. We're going to all we're going to watch for is that reversal candle, and then off to the races. Look how perfect this was. Again, this just happened not that long ago, less than a month ago. And we bounced up here, we got overbought, and then right back down like a textbook. And I went through this. I said for the last going on 3 years now, going on 3 years, like my chart doesn't even go back to that point that we got oversold on the daily. We've gotten that bounce, and then a pretty aggressive bounce too. So will it happen again? I say we do get a bounce as we get into oversold. Sometimes this could take a day or two, so it's going to be a little tricky with the entry. And does it come down to the 1980 or does it stick around to 2000? I think we're within 20 to 30 points of a significant bounce in the market. But once we start to break down from that channel line, a significant bounce might bring us back up to a retracement trend line, and we're going to go back down here. It's not going to go from here right back up to highs. We're going to have some issues. We're going to break down through some technical levels, and we're going to have to work through those levels again to get back on an uptrend. But going into next week, we have that daily getting oversold. First time in about a month. The 60-minute is oversold. That's one of my key combinations. News trumps everything. So if there's any news, this will flatline and the market will continue to go down, and we have those levels underneath us. I would say the lower trend line here of this 1, 2, 3 pattern should come into play on the cash. That brings us down to probably around 2,000. Then we have a 1980 level. I'd watch those two levels. If we end up being down there, but if we don't get down there, and news seems to be okay, we got the Fed rate decision on Wednesday. We could actually see a technical rise going into that, just because that oscillator is going to start turning up, and we have to watch it. We'll watch what kind of momentum. If we have a big candlestick on the daily, like we've been getting off of a situation like that, big candles, and we get those follow-through days. So that's what I would love it. That's our last kind of signal. A big candles come off of this. We need to get a big, decent candle. It's a lot to ask for going into Christmas. Oversold daily, oversold 60. We even break it down to the 5-minute. That was kind of chopping around. And the key concept today off of this is understanding that you're going to see the same patterns on your daily that you're going to be seeing on your 1-minute chart. So when you see that downward channel within there, you're looking at the same indicators, but you're applying them to that time frame. So right now, normally we get that oversold level divergence down here. Look for that bounce, overbought level, overbought, 5-minute overbought, more downside potential. And now we look at the daily oversold, the 60-minute oversold potential now to start seeing something grind back up. You see the pattern here. We're going to start this off. This is where we pretty much left off. So we're going to start off at 6 o'clock, less than 2 hours away, and we'll see if this pattern holds out. If actually the market comes down a little, we might actually bounce off of this trend line. If we move up, we might actually use this on the overnight trade. I don't pay attention to the overnight trade as much. It's just because it's just hard to be in the markets constantly. But I want to leave this up on the screen, and you can tune in and see how it's playing out. All right. So that's it. That's the market radar. I am expecting a little rally beginning of next week. We'll see if there's any news that kind of halts that. And from that point on, we're going to take care of business in the morning, tomorrow, Monday morning. Let's just take a look at some stocks fast. I promised you a look at some stocks. Well, I just came back and I just went through 200 stocks that I have on an important list that I watch. I would say 70 of those are setting up kind of either bearish or do not look attractive at all. And I'm more concentrated on trading the index versus shorting individual stocks. I mean, here's CBS. That just rolled over. It looks like it's going to go lower. There's a lot of stocks you could probably jump on here on momentum to the downside. But I said there is a lot more bearish-looking setups right now, but a lot of these also are getting oversold. So there's a lot of cross currents going into this week with the Fed rate increase. There's a few that I'm eyeballing. Again, IBM still kind of weak. They're starting to get oversold, but you can see I'm not going to try to capture a bounce on that. I'd watch down here. I mean, we missed that last bounce on this. I did like IBM back down here once it got oversold again. I think it was concentrating on it. It just didn't pull the trigger. It retraced back up to the trend line and pulled back over. It was a good short from that point. But like I said, even though you're a good short and you're pushing down, you're starting to get extended here. This one trading with the markets, when we take a look at the S&P overlay, or just look at the S&P, were basically the same type of, move up, move back down. So that is basically the same. HP is an oil driller, and it's been channeling out pretty good, and I've liked it into this lower trend line. It's kind of a small little bounce, and then Friday pulled back a little. You're starting to see, it's holding on to its gains from Friday. The stochastic's actually kind of lifting back up. We've been in this one before out of this wedge pattern, and I've done well with it. So I'm looking for another shot at it to go up here, even though there's just tremendous weakness in this sector also. So kind of dangerous. Someone stopped me on the street the other day and said they were watching Disney for a pullback to 105. I haven't looked at it in a while, but you can see a nice, if I would have said, look at that chart, I would say that 105 area is going to come into play again. This was an old trend line. We had a bounce off of that. It was a beautiful bounce. Just not that long ago, came down to that 100 level. I remember this. We were trading it. And it moved all the way up to 120. Now it's pushed back all the way to 108. It is riding the coattails of the Star Wars push, and then all of a sudden we started selling into it. Back to the 200, a big 200 level here and an oversold level. I mean, it's Disney. It's typically a great one. But, that 105 to 108 level, we're starting to get into a good level. Again, most of these stocks are oversold already. So you take that in consideration also. And then we have, why do I have that one down? Autodesk, ADSK. I just wanted to show you a perfect channel. And we pay attention to a lot of times to that lower trend line bounce. When we have an established trend line, we come down to it and we get oversold. But that's after the fact. This also looks kind of bearish as it's starting to rotate back down, and there's a lot of space here to get back down. So watching that to the downside. And then, of course, Darden Restaurants, we traded last week. We had a good pop on this out of this pattern. It did pop up right up to the 200. Acted perfect. Got overbought. We said, be careful up here. You overbought. The one that did not move yet is Brinker. So I'm still watching the Brinker, EAT. Brinker's another restaurant stock that gave us a little divergence right back here. And we got a little pop, a little pullback, and it's just doesn't have the movement that Darden had. But it still could come. So I'm watching that also. But the stock's not looking that great. I'm actually going to fall back to that special video I did for the members there. I think it looks like a great way of tackling this market going forward. I said I was going to probably really start adding the HPS setups when I start seeing it. I don't want to put anything out there that's kind of negative or doesn't really fit the criteria. And we have to really get by this Wednesday action and see how, going from Friday in this junk bond situation that's playing out, we have to be on top of this. So we have to be very cautious. And the one thing I said last week in last week's video is it's very important not to get yourself too involved before Christmas, because that sets you up on having a bad Christmas. Anyway, you could have a good trade going into Christmas, but lots of times markets don't do anything, and the majority of the time, and I've seen it in my history, that you try to force yourself to trade going into December, and that could just lead to some downside, especially if you think you got caught on the wrong side of that flush last week. You might be just getting a little hurt here, and you don't want that going into Christmas. Well, that's going to be it for today. So, like I said, in a couple, about an hour and a half now, we have the futures open, and we'll get our first look. Until then, we'll see everyone Monday for an exciting week in the markets. DayTraderRockStar signing off. I'll see you then.